Hey everyone, welcome to episode 5 of Talk Blockchain to Me. Today I am covering the topic of digital tokens and token sales, or what's known as an initial coin offering, or ICO. As of today, there has been $3.8 billion that have been raised through ICOs, with over $3 billion of that being raised in just the past 12 months. Now, that is a staggering amount of money, and what's crazy is how fast this amount of money is being poured into the space. So what exactly are people investing in, and how is it possible that so much money can be raised so quickly? So in a very general sense, ICOs work similarly to an initial public offering, or what's more commonly known as an IPO. For those of you who are unfamiliar with the concept, IPOs are basically when companies issue shares onto a public exchange, like the New York Stock Exchange, for money. And these are what basically stocks are. And companies can do an IPO for a bunch of reasons. It can be because they need more money to expand and an IPO lets them do that at a good rate, or because they think it will actually create more value for their company rather than just selling it. Some recent big IPOs include Facebook, Snapchat, Uber, etc. So with that understanding, let's take a look at ICOs. In an ICO, a team that is working on a decentralized application, or what's known as a dApp, will provide its investors a form of digital assets called tokens in exchange for their capital contributions. These tokens can function in a lot of different ways depending on the project, but typically when an investor buys a token as part of an ICO, what they get are cryptographic tokens, or for lack of a better term, computer codes, that represent their ownership or their right to use the service that the dApp provides. This means that these tokens are not physical objects, and usually these investors use a cryptocurrency such as a Bitcoin or Ethereum to buy these tokens. As a side note, most tokens in these ICOs are done on an Ethereum blockchain because it's really easy to build on the Ethereum blockchain. If you need a refresher on why that is, go watch my previous episode on the Ethereum blockchain. If all of this still sounds like jargon up to this point, let's take a really relatable example. Just a quick disclaimer, this is not at all supposed to be the best example of a successful ICO, but it is an example of what is being pitched out there. So most of you are familiar with the concept of dating apps. Tinder, Bumble, Coffee Meets Bagel, whatever. The idea is you download the app, you set up the profile, and based on your geographical location, you can then swipe left for no or right for yes on another person's profile to match with them. And you'd only be able to chat if there is a match. Now, Bumble actually recently launched a feature called Bumble Coins, where you use real dollars to buy coins that allow you to unlock certain features within the app, like a super swipe, which is a feature to tell a potential match that you're really interested. So let's use a decentralized version of a dating app for our example and bring this into the digital token world. Suppose there's a team that's trying to develop a dating app on a decentralized blockchain like Ethereum. They want to raise money for their project, but they don't want to go through months and months of trying to get a big company or a venture capital to invest in them. They want to build this app ASAP. They could do that by launching an ICO, because the idea is that anyone can contribute their cryptocurrencies into this project. So it's like crowdfunding, but with your Bitcoins. So in this dating app, they want the users to be able to use their app with the tokens that are offered in the app. Like Bumble Coins, these tokens will allow the users to access this decentralized dating app and use it to do certain things within this specific network. For example, let's call these tokens dating coins. If the app caps the amount of profiles you can see per day to 5 profiles, and the only way you can get unlimited profiles is if you had a dating coin, or if you had a dating coin, you'd be able to unlock and see the list of people who have already swiped right on you, which kind of saves you time and effort. Let's also say that there is a limited number of dating coins that will ever be issued into this app that our hypothetical team wants to create. So if there is a limited amount of dating coins and you can only use those to access certain services within this specific dApp, that gives these dating coins value. Based on basic economic principles, a limited supply and a high demand helps give value to something. That's why you see merchandise from Supreme being resold at crazy high prices. If I somehow get my hands on a Supreme hoodie for $100, I can probably resell that for $5,000 because there's only, so many hoodies and so many people who want it. Other examples are like Yeezy shoes, or if Rihanna dropped a really limited edition of Fenty highlighters tomorrow. Basically, the general idea with these digital tokens is that they will be tied to the growth of a specific project or business. And as that project grows in popularity, the thinking is that the token being purchased during the initial coin offering will also grow in value. So in a nutshell, ICOs are like venture capital plus crowdfunding plus speculation. It's kind of like venture capital, but most of the investors are normal people like you and me, and not necessarily these big firms or funds. And it's kind of like a crowdfunding platform like Kickstarter, but you don't necessarily get to own a physical product. And it's kind of speculation where some people are buying these tokens with the hopes to flip it at a higher price later, but some people genuinely buy it for the use of it too. Ultimately, the value is being determined by the value of the economy that's being created by this company. Basically, it is nothing like we have ever seen before. That is why there's a lot of questions right now about what types of laws should govern this type of fundraising, because there is none. This is a really frothy market, and it seems like every day we see new ICOs being launched. More and more companies are looking at it as a way to raise money. A lot of companies are offering ICOs before their network is even being built. And the question for a lot of these is, is the blockchain technology even necessary? Is this even a good idea? And unlike public companies, big banks, or stocks and bonds, there is nothing that regulates the ICO market and what they can say and who they can pitch to. And most importantly, what are the protections for us as a consumer and investors? Hopefully, the next year will bring some clarity to this crazy market and will provide us with more clarity in the fields of law, tax, accounting, and fundraising. So until then, ask the right questions, do your research, and don't forget to like and subscribe to my channel.